Hi everyone, today we will do a stock analysis on Zim called Integrated Shipping Services. It's a container shipping company. So let's get started. So very quick disclaimer, so this is not financial advice. I'm not an expert, I'm just talking about the fundamental and technical and just an overview of the company, and then I'm not paid to do this analysis. So just a quick company description. So first of all, Zim is quoted in the US stock market. Then it is the name of the company is Integrated Shipping Services, which is provide container shipping and related services in Israel and internationally. So then the major service that they have is door-to-door. So basically you will get one house address, get a truck to the port, then the port there will be like a ship where you put that container, then the ship will go to the other side of the world, wherever it is, and then from there another truck will pick up the container and then deliver to the other address. So other services that I noticed was the refrigerated containers, special cargo, so it's basically any size that is not container, bigger, or dangerous cargo, so explosives, all that, and then inland transportation, which is the trucks that I was talking about. And the company was incorporated in 1945, so that's quite a long time, and it's in Israel. So as of the August 2024, there were 148 vessels with 132 containers and 16 transport vessels. So within those 132 containers, there were 118 chartered vessels. So those ones are actually the one that you lease, and then the 14 one are the one owned. So this is the interesting part about this company, Zim, is that they lease ships instead of owning them. So like most other companies, I think from memory, own them, but in this case they pretty much 85 or whatever % is leased. So here is a Wikipedia page that I found that I thought was very interesting. So you have the link in there if you want to go and browse for yourself. So it shows all the container shipping companies, well, at least the first 30, and I just show you guys the first 12 in here because I didn't have any space, but it's enough. So here's to show that Zim is the number 10 in there, and it represents only 2%, like 2.3% of the whole container shipping industry, which I think is quite small, which is a good thing in my opinion because there is room for growth, but at the same time it makes it a little bit more risky because they are small compared to other peers. So let's talk about the fundamental analysis of the company now. So one thing to point out is the company size. The market cap is $2.83 billion, which I would say is not that big, but at the same time is big enough. Then in here we see like a 4.83% dividend. To be honest, I would not rely on that number, and the P ratio is inexistent, which is a little bit concerning. But let's get to the next page to get more details. So in here we have the Yahoo Finance fundamentals. So one thing, the same thing is like the 2.89 billion market cap, and like the trailing P looks in here so low, like 0.44. I would be a bit cautious about that too. And then the price to book is 1 is definitely the kind of number I like. We could see that in the past it was even lower. That may be related to the stock price that has risen since then. And enterprise value to EBIT at -4 doesn't sound very good. Let's get to the next page. So this is the financial highlight on Yahoo Finance. So that was for last year, but just to get quick things of what happened in the past. So $5.97 billion revenue is quite good considering the company is only $3 billion. Then there is the thing that is concerning is mainly the net income of 1.96 billion. So this is to consider this is like a cyclical company. So they have bad year and they have good years, and like it's like in cycle. So this is something to watch out and be very cautious. So the thing that I noticed as well was the debt that was pretty high considering the size of the company, and then the ratio as well, debt to equity, I think is quite high. The book value, which is 24, so it's like price to book of 1, that was something I like. And then like the leverage free cash flow looks quite good, like, which means that they seems to be making money. Then another few thing I wanted to show you guys is the 17% insider. So I think this is quite good in my opinion. And then the thing that is concerning, I would say, is the number of shares shorted. So 17 million out of a total of 120 or maybe 122 million shares. So it's nearly 10%, not exactly, but I find that quite a lot. And in here they're showing like a dividend around 5%. Well, I think it's hard to know because it's a cyclical company, and I'll show you why in the next slide. One thing I wanted to point out in the financials as well was that like if you look at the long-term debt, that's actually reduced from 519 million to only 62 million. And one thing to show as well is that most of the debt is in long-term capital lease, so in here, and like that has increased a lot. And that's, I think, comes from the fact that they leased the vessels instead of buying them. And I would say this is a very different strategy to what other companies are doing, but it shows that it's not actually really debt in a way, but it is lease, and it shows as debt. That give me a little more confidence on the debt level, and in a way that they have more flexibility with the number of ships that they have, so they can reduce some or increase some. In a way, it's kind of a leverage on the container index, which makes it really risky in a way, but at the same time, if you're looking for very high return, I'd say this is definitely the kind of place you look at to get very high return, but at the same time high risk. So this is a little like a fun little technical analysis I've been doing. So I was just taking the price on the left side, so in here, and then trying to like take that price and then copy it and invert it. And what's funny is that the price seems to be doing more or less the same and stop at the same areas, which, let's say, give me a little confidence that it could get higher. Obviously, this is just a guess, but it's nice to see at least that the price so far has been following it. Let's see if it continues. Very interesting. So this is pretty much the same chart, but without the inverted part, which was like a bit noisy. So just to show you that it looks like it found its bottom. So around here, that looked like it was like the bottom, then looks like it kind of break the structure on the upside, and it seems to be now on a like uptrend slowly. It doesn't seem very confident yet, but it is uptrend, so let's take it as an uptrend. So now let's talk about the third quarter coming in 20th of November 2024. So this is to get a little expectation of what could potentially happen. So let's first talk about the containerized freight index. So I went to the Trading Economics website, so you can go and check by yourself. And then but in there it shows that before January, you could see that the price were pretty low, which explain why in 2023 the revenues, the incomes were pretty low. But since then, like since the beginning of the year, as you can see in there, the container price has been increasing, and you can see that ZIM has been giving dividends. So it's been giving dividend for first quarter of 23 cents, which was not a bit small, but then 93 cents is a bit higher, which was pretty nice. And the third quarter, I expect it to be a little higher again, because as you can see, between this line and this line, that represent the third quarter, and the price around there is been higher most of the time compared to around this period. So I expect maybe 1.5, maybe 2. So that would be very interesting to see. And one thing to be concerning though is on the fourth quarter, it seems like the price been going down since, so there's definitely a potential lower dividend at that time. Now the thing to watch out as well that I'm a bit concerned about is the ZIM, like the price now, like it seems to be reverting up, but it's just still concerning because it's been going down for quite a while. So now the thing to watch out is, would it start going on the upside again, and then that would mean that ZIM will definitely rise, or would that actually continue lower and then ZIM might have issues continuing its uptrend? That is something I'm a bit concerned about, and I'm watching quite a bit as I'm involved in this stock. So yeah, that is what I'm concerned about, to be honest. So I would say, to conclude, the major thing I want to say is that this kind of company, the container companies overall, not just this one, are always very volatile, and this one a little more in particularly, but overall they are all very volatile and I would say quite risky. So if you know how to trade them, that's good, but if you don't, stay away from it. The advantage is, I would say, is that this specific one, ZIM, is looks quite undervalued compared to its peers, and seems to be like a smaller company, so it's got room for growth. As you can see, represented around 2.3% of the whole industry, which I would say there's room for growth if they can find, like, rise their market share. And the last bit, it seems to be like, even though it looks like they have high debt, they don't seem to have high debt, but lots of lease. And the lease is still concerning, I cannot deny, but at the same time it shows that they're a little bit more flexible in terms of, depending on what, if they need more container or not, they can make it a little bit easier to be flexible. Then the risk, so I would say the political risk, Israel, everyone hear about it. I'm not getting into this, but by default, it's not particularly good when someone talk about a country a lot. It seems like there may be something related to ZIM, which might be why the price keep bouncing a lot. I'm not sure, but the next one is the high volatility. So as you can see, it's been like going from, like, seems like, I think 80 to like not even 10 to then now 20. It's very volatile. And then the last one is like, it seems to be very impacted to the container price. So if the container price rise a lot, it will be like probably leverage, but at the same time, if they go down a lot, that company will suffer. So I'm not an expert in this area. I just share what I found, and if you have anything to add, that'd be good, or share in comments or whatever. If you can contact me. And one little thing I wanted to add is, I've been like, there is a person that I follow on X that is called like Chris Shipping, so I really recommend it. I don't know the person, but I thought he had very good tweets on ZIM, and he follow pretty closely. So if you want to have better in-depth understanding of ZIM, I think this is the guy. That's it. Thank you so much, and see you in the next video.